Before we get into today's edition of Dividend Dive, I have a question for you. Are you tired of getting paid pennies and interest on your savings account? Me too. That's why I listen to Dividend Dive, the high-yield dividend stock show that'll make your wallet say thank you. But, did you ever want even more insight into high-yield dividend stocks? Or better yet, would you like to get rid of ads like this one, so you only hear the actual episode with no ads at all? With our Patreon membership, you'll get access to exclusive benefits, including ad-free episodes, digital stock pick summaries, and live Q&As with our team. Plus, you can join our private community on Discord, where you can talk about dividend stocks and share your own investing tips. So, what are you waiting for? Join the Dividend Dive Patreon community today, and let's make some money. Go to Patreon/Dividend Dive. That's Patreon/Dividend Dive. Or just click the link in the description of this episode, and thanks for your continued support of our team. Now here is what you came for. It's time to dive in.
Welcome to Dividend Dive, where we'll teach you how to swim in the ocean of investing in income-producing stocks. Today, we're diving into the fascinating world of real estate investment trust, better known to the experienced investor as REITs, with a closer look at the divisive yet high-yielding dividend stock, Orchid Island Capital, whose stock symbol is ORC. Orchid Island is a real estate investment trust that's more complicated than the plot of Christopher Nolan's Inception movie, or really any other Christopher Nolan movie except the Batman ones. We love the Batman ones. So is Orchid Island a good or bad stock to invest in? Well, let's see. Imagine you're a hungry investor looking for some juicy financials to sink your teeth into. The stock's 2021 net income of $27.7 million is like a tasty burger, while their return on equity of 13.5% is like a side of fries. Delicious. However, be careful not to choke on the volatility of their revenue and net income, which can be a bit spicy for some. Now let's talk about the main course of any good REIT, dividends. Orchid Island's current dividend yield of around 19.4% is like a thick, juicy steak. It's enough to make any income-seeking investor drool. But be warned, a high dividend yield can be a double-edged sword. It could mean that the company, keeping our steak metaphor, is a cash cow. Or it could be a sign that they're about to be put out to pasture. As for growth prospects, Orchid Island Capital's management is focused on investing in residential mortgage-backed securities. It's like trying to navigate a maze made of Legos. Painful, but potentially rewarding. Ouch! The company is also selling off lower-yielding securities and reinvesting in higher-yielding ones. It's like trying to find the perfect pair of shoes at a flea market. You never know what you're going to get, but sometimes you strike gold. Okay, that was a weak metaphor, but we're new to this comedy thing. Finally, it's important to consider the current economic climate when evaluating the investment potential of Orchid Island. It's like trying to predict the weather in the Bermuda Triangle. Unpredictable and potentially dangerous, especially with rising interest rates causing reduced demand for homes. In conclusion, ORC could be a good investment option for income-seeking investors who are comfortable with the risks associated with investing in a mortgage REIT. Just make sure to do your research and consult with a financial advisor before diving in head first. As they say, investing without a plan is like swimming in shark-infested waters without a cage. You might survive, but it's not recommended. Hey there, before we end, we want to make sure we're transparent with our listeners. As you may know, we're talking about Orchid Island Capital, a real estate investment trust, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors, and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comments section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.